Peace. Welcome back to the Absolute Boss Collective. Hustlers, stand up. This one is for you. Today we're going to do Big Homies 2. Okay? We're going to talk about one of the best to ever do it. You know what I'm saying? And if you're new to the channel, consider subscribing. Like this video. Hit that notification bell, okay? Because we bringing it to you raw. We bringing it for the hustlers. We bringing it for the stock traders. We're bringing it for the investors. We're bringing it for the people that are trying to make $1 out of 15 cents. The working class, the people in the street, baby. That's what we do here at the Absolute Boss Collective. So without further ado, we are going to get into a video about the big homie, Jesse Livermore. Yeah, Jesse Livermore, there's a book out that's part fictional, part biography called Reminiscences of a Stock Operator. Pick that book up. I got it on paperback and I also got it on audio. You know what I'm saying? And I'm like on my third or fourth intake, my third or fourth dose of that book. You know what I'm saying? There's a lot of jewels in there, man. So let's get into some of the broad strokes of the outstanding parts of his career. This man is very, very influential. We're talking about 100 years ago. A lot of the things that he put down back in the day is what a lot of people live by in these markets today. This man was born in Shensbury, Massachusetts. Okay, July 26, 1877, about 10 years before Marcus Garvey and about 20 years before Elijah Muhammad. He died on the 28th of November in 1940 at the age of 63 by suicide. Shot himself with an automatic Colt pistol in a hotel in Manhattan. Okay? I think about those things, think about this guy killing himself and think about what he must have went through in those times that he was in. He certainly had some great times and some bad times. Filed bankruptcy 3 times, the third time being in 1934. A lot of jewels in just studying this man's life and studying what he did. He was known as the Boy Plunger, the Wolf of Wall Street. Okay, so the homie Mass Trader spoke about the Wolf of Wall Street movie, and we know that details Justin Balfour's life. But here, it's interesting to note that this was the original, the OG Wolf of Wall Street. He was also called the Great Bear of Wall Street. Before we get into any more details, I got some quotes for y'all that are really powerful, powerful stuff. He said, all a person needs to do is observe what the market is telling him and evaluate it. Peep the wisdom in that quote right there. All a person needs to do is observe what the market is telling him and evaluate it. So when we study his life, this man made his first trade at the age of 15 in what's called a bucket shop. Now, a bucket shop, back in the days where he was at, a bucket shop was known as a place where you could gamble on the price of a stock. Discovering this, what you could relate it to in the modern day, I would say is binary options, where you're betting on the direction of the market, and you make bank on that. If you were right that it would go up in the next 10 minutes or it would go down in the next 10 minutes. You know what I'm saying? So they had some kind of system like that back in the days, and he made $3 off of $5. That's how he started at the age of 15. Okay, some other notable things that you want to know about this man. During the panic of 1907, you can go look that up, the panic of 1907. 07. And during that time, he made bank during that time. Okay? We can get better. We can get better. During the crash of 1929, everybody knows about the stock market crash of 1929. Your boy made about $100 million. Okay? $100 million. In one of my other videos, we were talking about contrarian strategies. So to know that he did a contrarian strategy way back then, it made $100 million when most people lost their fortunes and jumped out of windows and stuff like that. This cat made $100 million. Okay. When JP Morgan stepped in to save the market, Jesse Livermore was rolling with him. Okay. So this dude was a major player. Okay. And I really wanted to just talk to y'all about that. Like Melle Mel said, let's talk about Jesse. He had that song, Let's Talk About Jesse. They was talking about Jesse Jackson when Jesse Jackson ran for president the first time. And that's been playing in my mind all this time as I've been putting together this Jesse Livermore video. Okay? So we're going to get into some of the rules that this man put down. Being that I'm a 5%er, and today's degree in the meat, all right? This is like, you got to be a 5%er to know what I'm saying. But today's degree in the meat talks about rules and regulations. And this big homie's segment of the channel is dealing with these players that put down these rules that we can look at today and use to chart our course, to do what we got to do. All right? So we're going to talk about that. You know what I'm saying? I would suggest, you know, if you got like Amazon Audible or something like that, you got iTunes, audiobooks, all your platforms. If you're not the type to sit down and read a book and underline, you know what I'm saying, like us 5%ers do, you know what I mean? You could get this audio book and just like listen to his story. There's so many jewels in the story. What's so fascinating about son is, as a little kid, right? Back in the days when there was no stock tickers, there was no stock charts. You had to draw out a chart, if anything. But what this guy did is, just by doing analysis of what was going on, he had a little notebook and he studied price action, price movement. And by him doing that, he was able to devise a way to beat the system. And this is how the man made his fortune. He made and lost his fortunes at least 3 different times. Okay? So this is very noteworthy because we're talking about a time when people didn't have cell phones, people didn't have stock alert systems or scanners or the access to the market the way you can. Like now, you can trade and invest and buy stuff. You don't even have to pay a commission. Do you know look up the history of commission prices? Okay, it was definitely set up so that the little guy could not play this game. Speaking about playing games, your boy Jesse Livermore said the game taught him the game. Okay, and that's what we're gonna talk about. Before we get into the rules, I'm gonna hit you with another quote that's gonna help y'all out on y'all journey. You know what I'm saying? If a man didn't make mistakes, he'd own the world in a month. But if he didn't profit by his mistakes, he wouldn't own a blessed thing. Ponder that for a minute. Let's get into these rules that he laid down back in the day. You know, I would say early 1900s, he laid down these rules. And there was a time, I say maybe a few years ago, where every single morning prior to market open, I would review these rules. I wrote them down by hand several times. And when we did the other big homie in the last video, I was like, it was really like leading up to this one, the sequel. You know what I'm saying? Because this was a brother. I mean, not a brother. This was a dude that I followed these rules and I was familiar with. You know what I'm saying? I mean, I guess you could consider him a brother in the sense of stock market people. You know what I'm saying? It's my brother in stocks, if you think in theory. Okay, let's get into the rules. Nothing new ever occurs in the business of speculating or investing in securities and commodities. 2, money cannot consistently be made trading every day or every week during the year. You know, and that's a harsh reality for all traders. And that's why sometimes you got to lean on scalping, because a lot of times the market goes sideways and there's no real direction. So you have to play with that channeling action that the market is doing. It's bouncing, you know, $1 throughout the whole day. You might have to extract 50 cents out of that. You know what I mean? To make a living, because as he said, every day or every week during the year cannot consistently be made. 3, this is a heavy one. Don't trust your own opinion and back your judgment until the action of the market itself confirms your opinion. Okay? 4, markets are never wrong. Opinions often are. 5, the real money made in speculating has been in commitments showing in profit right from the start. And I can tell you from experience, there's certain trades that I put on, and as soon as I press buy, it was off to the races. Next thing I know, I got $30, $40, $50, $60. Well, if my patience is on point, I can get up to 80, 100, 120. I've had trades where that has happened, and it's just remarkable how fast it goes from flat to a profit and on. 6, as long as a stock is acting right and the market is right, do not be in a hurry to take profits. 7, one should never permit speculative ventures to run into investments. It's like I lived every one of these rules, man. It's bugged out. 8, the money lost by speculation alone is small compared with the gigantic sums lost by so-called investors who have let their investments ride. 9, never buy a stock because it has had a big decline from its previous high. 10, never sell a stock because it seems high priced. 11, I become a buyer as soon as the stock makes a new high on its movement after having had a normal reaction. This is a big one. This goes out to all of the Wall Street bets people, okay? And all traders and investors primarily never average losses. That is the most controversial rule that there is, because sometimes people average losses and they get out. And because they get out, then now they form a habit or think that doing this is the way. It's a wrong bias or confirmation to get. You know what I'm saying? You average this loss, right? You put more money on something that was losing and you got out. So what does that do to your psyche? It makes you to start to think, oh, I could always do this. And that's not the case. And sometime when that drawdown comes, it's going to be swift. It could wipe you out. Okay? 13, the human side of every person is the greatest enemy of the average investor or speculator. Truth to power right there. 14, wishful thinking must be banished. So to all of you people that I'm seeing on social media that's talking about, you know, I hate to say this like this, but we're talking about AMC and GameStop, and I've seen so many people posting about that, and they'll say things like, it's going back up. And you can tell by the way that the person is even commenting that they're a novice or they're new to this. So my question to them is, what makes you think it's going to go back up? I have been in that position where I've held something that was killing my portfolio. And I had that same theory. It's going to go back up. Stocks always go back up. But it doesn't mean it's going to go back up on your timetable. Okay? What is it? Risk management. Risk management. 15. Big movements take time to develop. 16. It is not good to be too curious about all the reasons behind price movements. 17. It is much easier to watch a few than many. So all of the people that's coming, here at the Absolute Boss Collective, we launched a contest, giving away $500. And a lot of people are coming, you know what I'm saying? I'm getting traction for that and all of that. So all of you people that are new and learning and you want to get into this game, I encourage you to create a watch list. Look at what's around you that you are familiar with that you can translate into making money. If you the type of kid, if you the type of dude, brother or sister, right, who's into sneakers and Nike is your favorite brand, Nike is a stock that you can follow. You can put that in your watch list. You can learn when their earnings come out. You can study that company, study its leadership, study its history, and make that one of your cash cows. Why not? Okay? If you shop at Amazon, or Target, Amazon is very high priced, okay? So let's take it to Target or Walmart or Home Depot even. Let's come down a little bit. You know what I'm saying? And get some of these stocks and follow them, man. Create a watch list for yourself and watch them. And as you study them and you study their patterns and behavior, you can learn to trade it if you're doing your homework. Or you can invest in it. Just invest in it. If it's a company that you like and you believe in, invest in it, okay? 18. If you cannot make money out of the leading active issues, you are not going to make money out of the stock market as a whole. So everybody that jumps on these penny stocks and, penny stocks, I don't want to talk bad about penny stocks because you could use penny stocks to make money. Okay. The problem with penny stocks is a lot of the companies are shit. That's the problem. Pardon my language. A lot of the companies are no good. Okay, so it's not really prudent for you to be putting your hard-earned money in those when you can put your hard-earned money on something that's more stable and derive a income out of that, hustle out of that. Okay, play the big dogs. You know what I'm saying? And you can do it even if you a little pup, money-wise. You can learn to play the big dogs and get some money, okay? 19. The leaders of today may not be the leaders of 2 years from now. Things change. 20. Do not become completely bearish or bullish on the whole market because one stock in some particular group has plainly reversed its course from the general trend. 21. Few people make money on tips. Beware of inside information. If there was easy money lying around, no one will be forcing it into your pocket. Okay? Again, we don't suggest that you take tips. Okay? You do your homework. You make a watch list. You follow the stocks that you want to follow. And to all my Wall Street Bets people out there, all of my penny stock traders out there, it's fine to make a watch list of penny stocks. And just for the record, any stock that's trading $5 or below is kind of considered a penny stock. You know what I'm saying? And a lot of times, those things, because they cost so much, cost so little, they move more shares, which makes it easier for you to get in and out of them. So even if you are trading a stock that is $1 or $2, You know what I'm saying? And let's say you took that stimulus check to play this game, you can get, 500 shares. You know what I'm saying? You do something 500 shares and you do it for 10 cents, you know what I'm saying? Or 5 cents that you make off of that trade, that's real money. Okay, so I'm not trying to belittle anybody for looking into those. But if you are new, okay, I suggest you go with more stable companies because it's easier to predict. Remember, we're in a probabilities game, okay? A lot of penny stocks, you might have buy it at $1. You might have seen it go up to 150. Matter of fact, you bought at 150, and then it comes all the way down to 10 cents. Now think about that, okay? It's too many variables messing with the penny stocks, and that's why I said what I said, all right? Let's get into the last quote that I'm going to share with y'all from the big homie, Jesse Livermore, okay? Set your own rules. Stick to them. Never argue with the market. Never make a play you can't afford. Never give away to irrational exuberance. Above all, don't be a sucker, okay? That's from the early 1900s. Jesse Livermore said, don't be a sucker, okay? All right? There's a lot of, you know what I'm saying, things to trip you up in this game, okay? But if you're new to this channel, subscribe to the channel, like the videos, and hit the notification bell so I can help you not be a sucker, okay? This is Absolute telling you, look, listen, and learn. Work, wait, and win. Fresh for all traders and investors, you suckers. Peace.